You do see global growth easing further, but you don't see a recession in the US. I'm just wondering which countries you do potentially see a recession for. Where are the warning lights flashing?
Well, what we've seen over the last 12 to 18 months in the world economy is the outsized impact of a slowdown in China on the broader manufacturing sector globally, but particularly the European economy, the Eurozone economy. And within that, it's Germany that's been most exposed because Germany runs the largest current account surplus, has a very large share of exports in GDP, and one particular area of its industrial structure that's left it vulnerable to the weakening in global car sales, which has been related to China's slowdown, auto sales have taken a really big hit on the German economy. 4.5% of German GDP is auto production. So it's really been the Eurozone in terms of the major global blocks that's been vulnerable. And obviously that continues to be an issue because we further downgraded China's growth forecast. And now we have this new external shock to the Eurozone potentially with a no-deal Brexit in the UK. We think if that happens, if there is a no-deal Brexit, we think that could knock a further 0.4 percentage points off of Eurozone growth in 2020. We've already downgraded our Eurozone forecast by 0.2 percentage points yesterday. We think that we could be knocking another 0.4 percentage points off of that forecast for 2020 if there's a no-deal Brexit in the UK. So getting punched from every direction, the Eurozone.
So what are we expecting from the ECB on Thursday?
I think the way they've set up expectations, they have to deliver something pretty punchy. I think it's going to be a combined package of measures, not only movements on the deposit rate with some tiering on reserves to offset the negative impact on banks, but also we think they're going to restart the asset purchase programme, probably something like 30 billion a month.
It seems that there's a global picture right now of a slowdown in the manufacturing sector, but not only that, just business investment in general. Here in the U.S., for example, falling for the first time since 2016. How troublesome is a business investment picture around the world?
Well, what that shows you is that firms are not waiting until these trade tariff sanctions are actually kind of signed, sealed and delivered and the ink is dry. They're not waiting for that to happen until they scale back on their investment. We've seen in the UK, for instance, because of the risk of no deal, because of the uncertainty about the future relationship, business investment has fallen for 5 or 6 quarters in succession now in the UK. And the US numbers, as you just mentioned, have already slowed down. We've seen it in China as well. So this is an area of domestic demand that is very closely linked to the trade threat. But in the US context, I still don't think that and the manufacturing slowdown is enough to drive a recession in the US. The consumer is pretty resilient there. The labour market is strong. Yes, we see a slowdown. We've got growth in the US slowing to 1.7% in 2020, and it was 2.9% last year. So it's a material slowdown, but we don't see it. We don't see it heading into recession territory. We don't see the private sector having run up the sorts of imbalances that you typically see before recessions in the US. And on top of that, the federal fiscal policy is still pretty expansionary. So I'm pretty heavily discounting these signals of an imminent US recession.